Welcome everyone to the Intersection 4 podcast. We are here for episode 13. We have two of your usual hosts here. You have Hamis, the investor. You have me, the philosopher and product guy. And today we have a special guest. We have Kelvin. Kelvin is an offensive tackle for the Arizona Cardinals. He's also an angel investor. He's also a big advocate and philanthropist in the field of STEAM. It's actually one of the first times I hear of STEAM. It stands for Science, Technology, Engineering, Arts, and Mathematics, and as well as an SMU alum. So today we're going to be talking a little bit more about his journey throughout the NFL, doing the transition over to doing some angel investing, and some of his thesis for the future around AI and some of the field of investing that he's doing as well. And we're also going to touch base a little bit on the philanthropy work that he's doing. So I'll pass it on to you, Kelvin. Do you want to give a quick intro of yourself that is a little more complete than what I just gave?
Great job, Sam. But going into my 13th year in the National Football League, went to SMU, alumnus of Hamis. Had the opportunity to play football there. Got a full ride scholarship to play there at SMU. Graduated in 3.5 years with my degree in economics and sports management. Got my master's in 16 months in organizational dynamics before I was drafted in 2012. Served a lot there at SMU, the Student Athlete Advisory Committee at the school level, the Conference USA. I don't even know if that still exists today, but the Conference USA SAC Committee, and then I also served on the NCAA SAC Committee. So ended up serving in a number of different roles in leadership. And then also on campus was a part of the Student Affairs Leadership Council and the Commission on Substance Abuse that was started by President Gerald Turner there. So have been involved in leadership for a while and had the opportunity to then take some of those talents over to the National Football League. And while I've been in the National Football League, I've served with the Social Justice Working Committee at the league level, within the NFLPA, within a number of different committees there. Got the bug of angel investing through being a part of the One Team Collective initiative that was started by the NFLPA back in 2015. So I've been fortunate to play a long time, but also fortunate to be in a number of different rooms and experience a lot of different things in and around the National Football League. So not only playing, but also understanding the business of the National Football League, which I think is equally as important.
This is really cool and really cool background as well, man, that you have. And you've been all over kind of doing leadership positions and also really involved with just advocacy and civic engagement from the very beginning. So one of the first things that I wanted to ask you, and I think we could start there, is that there's a lot of stereotype around professional athletes. That is that they're very much like a lot of brawn and not a lot of brains, which is clearly not true. But I do know that this stereotype exists, and it exists also in the world of asset management and of investing and on startup founders as well. So, I mean, just the books that you have behind your camera already give away how much you read and study. But like, I'm curious on how you combat that stereotype. How do you go about like shifting the way that people tend to look at professional athletes?
I think first and foremost is being on time. Many people and many athletes, I think, are somewhat inconsiderate of others' time. So just the simple fact of being on time and showing up. I think if you can do that in any career, you will actually be, head and shoulders above a number of people. But I think as an athlete, to be on time and showing up within the professional sense, we have a bus that's taking us to the football game. We have a bus that's taking us to the airport. But when you as an individual have to show up on time for a meeting, show up on time for an appearance, show up on time for a game for your kids, those are the types of things that I think many people start to realize those are some of the stereotypes that are associated with us. And then I think it's something that I continue to combat. I had the opportunity to speak at the commencement for my master's, and that was one of the very conversations that I had, was being able to defy the stereotypes and really go outside of the box that many people put student athletes in, as well as athletes in. So yes, bronze is something that is real. We are talented individuals, but I think many times, many people don't even give folks the opportunity, especially athletes, the opportunity to really be able to showcase how they think, their sophistication, their ability to network, their ability to understand networks. And I think if you talk to any athlete, especially those that are in team like sports, they understand concepts because you have to be able to work with people from all different walks of life, all different socioeconomic backgrounds, all different religions, all different geopolitical views, and you got to find a way to win. On your perspective day, whether that's on the basketball court, whether that's on a football field, whether you're on a team that's a collegiate team playing golf or a collegiate team that happens to play tennis. Yes, you're playing for yourself, but you're also playing for your team. So I think when you think about that, and think about that in relation to the concepts that we end up taking part in, we're able to actually translate that into many other fields, whether that's on the business side, whether that's in sports, media, and entertainment, whether that's in fashion. So, folks are able to take those passions and be able to translate that over to the business interests that they may have.
Yeah. So one more thing that I will highlight there is that the dedication that it takes
Yeah.
to reach the level of a professional athlete. The dedication sticks with you, right? Regardless of what you do. So you just point the dedication to anything. You can become one of the best artists in the world if you so wish to do so, or one of the best investors in the world, one of the best engineers in the world, if you already have the same level of dedication. So I like that a lot, and I'm seeing a trend of more athletes and professional athletes getting more involved in the world of investing. And I want to ask you about that trend specifically. How is it playing out inside of the NFL? I think I heard you saying that you received the book on angel investing through some organizations inside of the NFL. How is that education internally about allocating your assets and investing in the future of society?
I think it's really something that's talked about quite a bit within our game is being able to once save your money. There was a huge film that came out 7 to 10 years ago called Broke, 30 for 30 movie that came out. And I think that it really highlighted some of the issues that many athletes, not only in the NFL, but across sport, happen to deal with. You come into a lot of money very early on in life, 20, 21, 22 years old, and now you're a millionaire, and there's an excess amount of money that's inflowing throughout, your account. Your income is skyrocketed. I mean, you went from, a disadvantaged socioeconomic background to now being in the top tax bracket in the world overnight. There are some pitfalls that have occurred for a number of guys. So I think that the NFL has really tried to do a really good job in making sure that financial literacy is something that's talked about, is brought to bear. And then I think there are a number of athletes that have taken that and ran with it. There used to be a time where endorsements were a big thing. Now guys don't want endorsements. If you're not giving equity or a form of equity or barter that allows for equity to come down the line, there are not many athletes that are willing to do that particular endorsement. When you think about collegiate athletics, and you think about NIL, you're making more money in college than you would be making in the pros in some senses. And I think, for some NIL players, they're starting to think about the conversation around equity as it pertains to cash. So the conversation and the evolution of where athletes are and how we think has changed dramatically over the last 2 decades. But we've had great peers who've done it. You've had Serena Williams that's done it. You had Shaquille O'Neal who's done it. If you want to go back even further than that, you had Dr. J and Magic Johnson who did it at an extremely high level. You got Emmett Smith and Roger Staubach who did it within the real estate space. You have
Messi
Harris
too
Barton.
with the recent.
Yeah, Messi. I mean,
Messi,
you got Roger Federer, who's done it. I mean, the list goes on. And if you were to look at it within the private equity space, you got people like Steve Young and Brett Jones, Harris Barton, Joe Montana, Ronnie Lott, Harris Barton, Ryan Neese, Andre Iguodala, Kevin Durant. I mean, the list goes on and on as athletes have been able to leverage their celebrity and be able to turn that into being able to leverage that off the field and within the boardrooms, which I think is the most powerful thing. It's one thing to do it on social media, but I think it's even more powerful to do it within a boardroom.
Yeah, 100%. And they're in the boardroom. That's one of the questions that I wanted to ask you, James, is as a capital allocator, invest in a startup, say. Let's say the startup is an AI company. And you're sitting at the board of the startup or the board of advisors and so on. And then the cap table of that startup is formed by a lot of people with traditional financial backgrounds, and then somebody who comes from like a professional athletics background. How is that? How is that management of interests and experiences like from your perspective, right? Like what are some of those things that a professional athlete brings to a company that has nothing to do with sports, for instance?
Yeah, so it's the same way that all investors are not made the same, all athlete investors are also not made the same. Right? So if there's an athlete investor that has a history of understanding new technologies, investing in them, and actually helping those businesses grow, then they're obviously far more credible and far more valuable to the organization than an athlete that maybe is getting started with their career as an investor and maybe doesn't have uh, the background or the depth of knowledge to help these businesses. I have seen very like extreme cases of this, not exactly from athletes, but I saw one company that actually went public, and there were two influencers that owned 10% of the company each of a publicly listed company because in the early days they had set up some, structure. And that structure was completely flipped because the CEO had a fraction of the equity that the influencers had.
Oh wow.
The founders had a fraction of the equity because of the way that it was set up. And so that company, even though fundamentally might have a product, a business model, like was set up for failure because it wasn't set up the right way. It didn't align the incentives the right way. So I would look at two things. I would look at the track record and the experience and knowledge that that person brings, regardless of who it is. It could be an athlete or anybody else. And then I would look at how the incentive structure has been set up. And as long as you show me the incentives, right? Like people say this, you show me the incentives, I'll show you the result. And as long as those two things are well structured, athletes make some of the best team members that I've ever seen. I personally have a bias towards hiring athletes and partnering up with athletes, or hiring and partnering up with veterans, because their like work
Interesting.
ethic and their like the way that they organize a structure around a goal is just unmatched. And so recently, an NFL athlete joined our organization, and you can see the difference between the way that they handle problems and the way that others handle problems. And it's funny, like sometimes, like when we're looking at back at sales calls or we're looking at stuff, like it feels like we're watching tape because they're acting like they're watching tape, and it's incredible, right? Like it's been an amazing experience. So I would look at those two things to kind of make the decision on like how valuable any person can be, and as long as they fit those, we would love to have them help.
Kelvin, so a question for you here then is I want to understand a little bit more about your background on the side of investing, right? So help me understand here, what is your thesis? What sort of companies do you invest in? And when you're looking for a founder, what do you look for in the founder when you're going to write your first angel check for them?
Well, I would take you back a couple of years because the way in which I got involved was looking at companies that were coming out of CMU at the time. So these were companies that were in robotics and drones, emerging technology, which I find extremely fascinating. So when I think about the thesis and the sectors where I spend the most time is data infrastructure within the enterprise software kind of overall category. It's fintech infrastructure. And then there's critical technology, which, for me is things that are touching national defense, cybersecurity, emerging technologies, like I mentioned, drones, robotics. So for me, those are the areas and the interest, and for me, the thesis that I look for. I look at companies within the Series Seed and Series A stage. Late seed is where I've had the bulk of my success, but I went up and down the capital stack. I can look at a company that's on a paper napkin that's being incubated, and I can look at a company that's being took private in a pipe. Or I can look at a pre-IPO type company, or I can look at a private equity deal. Like I'm a huge believer in understanding the capital stack and up and down the capital stack, whether it's debt, whether it's credit, whether it's mezzanine, like what have you. I think being able to understand the capital structures, capital markets, private markets, equity markets, all that does is inform the decisions that you're making at whatever stage you choose to deploy capital. But for me, it's really been primarily within the seed and Series A stage. And what I look for first and foremost is this somebody that I want to spend the next 10 years of my life with, period. That is the first question that I tend to ask in the conversation that I'm having. And then as I get to know them, I really want to understand what it is about them that is their edge. What is their secret sauce? What is their superpower? And then I get into the business. Is this a business that I find to be something that can return capital, 4 times over if it were in a fund structure? Can this be a multi-billion-dollar exit? And some people were like, well, Kelvin, it doesn't have to be that big. I'm like, well, why not? Because I can go and, take $1 and turn it into $3 in the public markets. You could keep and it be liquid and not be locked up.
Yeah.
But if you're in the private markets and you're in the early stage investing game, you got to be shooting for the moon. And if you're not shooting for the moon, this isn't a business or an asset class that you should really be taking a look at, because it is the riskiest of all asset classes. I think 1 in 30 fail. There's a lot of money that's deployed, but how often is money actually taken out? There was an investor that told me recently, he was like, Kelvin, anybody can deploy capital, but can you get it out of the ground is really the question that we all have to be able to grapple with.
Kelvin, do you also look at assets as an LP in funds?
Without question. I've had a lot of slugs into really great funds. Ames is probably going to be kicking me in the face because I didn't invest in his fund. No plug to Plutus 21. But, I've had an opportunity to invest in a number of funds. And that's why I mentioned understanding capital up and down the capital stack. I got some, I got a hedge fund. I got some private equity. I got some public and private credit to make sure I got some cash flow. I got some real estate. And I think about real estate in both commercial and I'm country. So I love large tracts of land. So, for me, and it's art is another asset. I love it, but it's also another asset. So I think about, for me, assets as a whole and really figure out how that plays in my bigger picture personally as I think about the wealth creation for my family. But when I think about, the career that I want to have as a private investor, as I continue to grow and mature, it's thinking through things in that particular regard of understanding the big picture and understanding where I fit within the smaller picture, within the little sphere that I will be spending time in.
I think it's really interesting that you just mentioned that you do both. You of course diversify your assets across the funds that you invest in, but you also do some equity investing and some venture investing, if I got that right. But I think it's interesting because you do both venture investing directly as an angel, but you also allocate assets to funds. So I want to turn this into a question for Hamid. Let's say I'm an LP in your fund, and I want to allocate assets to your fund that is doing VC investing. And let's say I'm also doing angel investing. How do you handle that? I'm curious on the handling of an LP who's also doing investing individually on their side. Do you try to stay away from the same profile of companies, or is there overlap? Is there a case in which you're an investor alongside one of the LPs of your fund, or how does that look like for you?
They actually make, and I think Kelvin will agree with this, they actually make some of the best partnerships, right? Because you're not just talking to an LP that has a lot of experience, let's say, in real estate, but they don't understand your world. You actually have a peer that you're speaking to, and you're bringing them opportunities, and they actually are bringing you opportunities. And more importantly than that, when there is an opportunity to look at, you have an informed person to bounce the idea off of, right? And that person is able to help you, like, even diligence these deals. So they make some of the absolute best partnerships out there. And of course, some people might see it as some sort of conflict. The best firms really don't, and the best, I think, LPs also really don't, and they just use it as a way to learn off of each other. Because naturally, Kelvin's background and experience, like his network is really vast, and he's seeing things and learning things that we might not be seeing and learning, and we might be seeing things and learning things that he's not seeing and learning. And so if you keep it as a good relationship, like for example, one of the things that we'll do is on a weekly basis, we send all of our investment committee notes to all of our LPs. Like we tell them, we looked at these 3 companies, this is why we said yes, and this is why we said no, every single week, like clockwork. And what has happened is we're talking to a real estate company. We said no. We sent it out, and one of our real estate LPs said, no, actually, I want you to take
Cool.
a second look with
Cool.
me. And then we sit down and look at the company again. We're like, oh, actually, this is kind of interesting because we now have that subject matter expert helping us make that decision. And so we love those partnerships. Those are some of the best.
And I would add to that, the thing is, there's alignment, to be honest with you. And there's alignment from the angel and from the institution. As an angel happens to be an LP in a fund, you want to see that fund succeed, period. So if you have a deal that is a really good deal, you want to send that over to that fund manager, and vice versa. You want the angels in your network to succeed. So if there's an opportunity as a fund manager to be able to cut an angel in to, around, you want to bring that angel in. So I think that there's an alignment there. Now, the question is when you're an LP in a number of different funds, how do you as an angel figure out the dynamics there? And that's what I love about the private markets. The private markets, there's opportunity for there to be a little mix and match with different people. And that's why I mentioned the multiple asset classes that I'm an LP in, because I don't want to have to be competing with, two of my big dogs within the private equity space, or two of my big dogs within the growth equity space, or two of my big dogs within the venture space. If I have a real estate deal that happens to be a really good real estate deal, I want to send it to, the folks that manage kind of that real estate portfolio. If it's a private credit, type of deal, I want to send it to the people that do things in private credit. So I think when you have the ability as an angel to spend time in the private markets, you have a lot of flexibility, and you have the ability to be able to leverage the resources that you have in a very pragmatic way in many cases.
Yeah, I have a question for you, Sam. So as you look, you're a product guy, philosopher, you might consider starting a business at some point, or I know you've been involved in businesses before as well. When you choose between an angel investor or a fund investor, like what goes through your head as an entrepreneur on why or why not, or maybe you want both of those people on your cap table? Like what makes you choose between these?
I think it's fundamentally just a matter of alignment, especially if you're doing like a seed raise, or even like to a Series A standpoint. If you're looking for angels, or if you're looking for your first seed check, or early in the investing stack, I think alignment is the most important thing. So not just somebody who can give you the check, but of course somebody who can like guide you through the process and has the connections needed to open the doors that you want for the business that you have, right? So if I have like a fintech company that I'm starting, I'll go after LPs. I'll go after funds or investors directly that have that background in fintech that can actually move the needle for me on that sense. So if I'm starting something in the sports industry, of course, somebody who understands the sports industry as well as I do, right? And so on and so forth. But I actually want to put a pin on this discussion and take us in a bit of a tangent, because I think you're going to have a really interesting insight on this topic. So I play tennis for most of my life. I play college tennis too. And one of the really interesting things from tennis is that as early as I can remember, watching tennis games and even playing it myself, technology was always part of tennis. So tennis was a sport that adopted technology very early. The iHawk camera that's basically tracking when you have an out or an in ball, and a bunch of like wearables down the line and so on. And then I compared it with, say, football, soccer, that took until 2018, I think, to actually implement VAR. It was as if soccer was so traditional that they were holding against the implementation of technology. And I want to get your thoughts on this. Since you're an investor both in emerging tech, from drones to robotics and so on, and also professional athlete, how do you think tech is changing, not just sports, but I want to specifically talk about American football? How is tech changing the game for you?
Tech is changing the game. It's a part of the game. It's in the fabric of the game. All that I ask is, if technology is going to be a part of the game and wrapped into the fabric of the game, I want to own a piece. Simple as that. As simple as that. If technology, if you're going to put a wearable on me, okay, do I get a piece of the company that happens to be the wearable? That was one of my first investments, was a company called Whoop Technology.
Yep.
For that very reason is, okay, y'all are about to be tracking my sleep, my strain, how fast, how violent my foot is striking the ground with the sensors that you have in my shoes, how violent I'm using my shoulder pads when I happen to hit somebody, how violent somebody happens to be when they're hitting me in the head. So you have a sensor in my helmet. I have so many sensors on my body when we go into a football game. Where do I, as an athlete, a professional athlete, who is not only the entertainment for the venue that I happen to be in, but also the talent and the person that is being masqueraded with with sensors. How do I get to participate economically within the confines of my sport? The NFL has some of the best brands that are involved, and tech brands that happen to be involved in our sport. AWS, Microsoft, Apple. You know, at many points in time, they've had Oracle. They've had IBM. You mentioned tennis, IBM, which is, you know, one of tennis's biggest brands. All I ask is, how do I get a piece of the equity and a piece of the pie that is being used to exploit the entertainment that I'm giving, you know, fans? Yes, the game is all about the fans. Y'all gonna pay the money to come and watch us play. We're gonna be wearing technology. How do I participate as an investor in that aspect of the game?
One thing that I've seen in professional sports over the last couple of years is an empowerment of the athletes as far more than just the core of the entertainment piece, and actually as primarily as investors, as capital allocators, and so on. And one question is, maybe just anecdotally, if you have seen this happening too, and James, this is also a question for you, is do you think this like ruffle any feathers with the way that things used to be for hundreds of years, in which the athlete was more seen as a pawn that the business people behind were just moving around, as opposed to an active player in the business aspect of the sport industry?
Well, from the limited perspective that I have, I think that, again, it just comes down to incentives, right? Because if I'm the CEO of that tech company, I can either say the athletes get no part of this and they have to wear my technology and they have to participate, they don't have an option. And I'm going to mine that data and use it a certain way. Or I can bring them into the process and they'll actually help me refine the product, refine the solution to the point where it not only solves their problem, but probably helps us, you know, uncover a bunch of other solutions that we come up with. So I always say, you know, the best tech companies, they're built from a deep, deep place of empathy. And if you don't have that empathy, me as a business owner who's never played American football, right? If I don't have empathy for the experience, I can't solve the problems. And so the closer that you bring the actual people to the business, the better the empathy becomes and the better the solution becomes. And so it's not because I don't think business people should do it because they're nice people. They should do it because it's what's best for their business to get more and more empathy into their solutions.
You know, and I think the NBA has done this at the highest level, to be honest with you. When you think about the game and the international ramifications and the globalization of what the NBA has done, they found a way to incentivize the players to be very entrenched and very involved in their business. So when you think about it in that particular context, you realize that both parties need each other to be successful and successful at a high level. The NBA's brand and the players' brands that are associated with the NBA are some of the biggest brands on the planet. And they also happen to have access to some of the best deals on the planet. I mean, look at what's going on in San Francisco and with the Warriors, and people who've played for the Warriors over the years have been able to do within the technology sector. The access that they've been afforded and the access that they have just due to proximity and due to their team being successful has paid, you know, major dividends. So when you, again, I think, you know, Ahmed says it's the right way, is that when the incentives are aligned, it makes it very, very easy, and it makes it a win-win situation. Adam Silver wants to win just as much as LeBron wants to win, because if the game of the NBA wins, everybody wins in that particular regard.
How about, okay, we're closing in on the last seven minutes or so that we have you here. I want to pivot us to what you see yourself doing after the league. So what comes for you after you're done with your professional career. And also walk us through a little bit of the work that you're doing in philanthropy, particularly with STEAM, right? I want to hear the rationale for the A inserted in the traditional STEM, and also want to hear how you see yourself after the league.
So after the league, I will be in the private markets. That's what I love. I'll be on the other side of the table in some respects, but also having the ability to angel invest and be an LP as well. So I will be in the private markets in an institutional fashion once I'm done playing the game. As it pertains to STEAM, when you think about where the world is going from a globalization standpoint, science, technology, engineering, arts, and math is touching every piece of all of our businesses. Whether it's an engineer, that's the mathematics and that's the technology. Whether it's blockchain, you got to be creative. So the arts play a role within blockchain technology. But I see that as an opportunity to be able to show the young people what's possible. Let's not tell them what they can't do, but talk about the things that they can do. And I think within STEAM, there's a lot of room to grow. Now, the arts is something that I love because I'm also, a huge fan of the artistic nature of many artists, visual artists, painters, and sculptors. So I think that that's another arena where people can have access to a career. So STEAM is really about access, awareness, a career, something that really gives life to the ability to be in this particular field for the long term. And you look at everybody that's on this call right now, we've done something science, technology, engineering, arts, or math related at some point in our life. I mean, you look behind your board, you see all these different letters. There is something math related behind you right now. You know what I'm saying? You look behind the mez, you got a piece of art behind them. Like, that is just the world that we happen to be in right now. And I want to make sure that our young people have the opportunity and an equal playing field to be able to participate. Because this is where the world is going. I mean, you look at the top 10 most profitable companies on the planet right now, and they are some way, in some shape or form or fashion, involved in science, technology, engineering, arts, and math.
Yeah, and one of the things that I think about a lot, and I've been thinking about a lot for the last 6 months, is as computers take more and more of the manual labor of humans away, the real skill set is going to become the creativity and the communication that humans can have with these computers, and the harder kind of skills that you can have will become less and less important because computers can replicate that. I saw today that it sounds like even ChatGPT can replicate some of the, not ChatGPT, OpenAI can replicate some of the creativity. But I think that's going to be the last thing to fall, which is going to be the creativity and the communication that humans have. But the harder things are going to fall first, I think.
No doubt.
Yeah, 100% agree. 100% agree. And is there any way that people can say support some of these initiatives to bring equal access to STEAM, Kelvin?
Well, you have my website, kelvinbeachum.com. That's always a great place to start. I'm also on LinkedIn, Kelvin Beachum Jr., as well as Instagram, Kelvin Beachum Jr., and I used to say Twitter. It's now X. I don't use it as much, but also Kelvin Beachum Jr. there on Twitter. But more than happy to have the conversations and more than happy to collaborate. I'm not trying to reinvent the wheel. It's been able to collaborate with those who see this as an opportunity to be able to help the next generation.
Awesome. Well, really appreciate all the work you're doing, not only with STEAM, but also really appreciate the time and your eloquence and understanding of markets and bringing such an educated discussion and giving us an interesting insight into the life of an investor and also a professional athlete. So thank you for coming, Kelvin. Really appreciate it. And we'll see you all for the next episode. Thank you.
Yeah.
Perfect. Y'all take care.
Much.